There is a death cycle that grabs traders, it sucks them in, spits them out, and just leaves them very confused, very sad, and on the verge of quitting. But it doesn't have to be this way. And there's this cycle that happens in our trading, and it is so easy to get on the wrong side of this. And if you don't understand that this is happening, or if you get on the wrong side of this, what's going to continually happen is you're going to go through these moments of hope, in these moments where you start to feel like you have this thing figured out and you're starting to understand this. And it's going to be followed by getting crushed by the market and just slapped around. And if you can understand this and get on the right side of it, there will be times where you can survive and make it, and then you'll be in a good position to also thrive. So let's talk about this cycle, because when it comes to our trading, all of us are obsessed with winning, and rightly so. We all want to win. And it's very easy to kind of avoid or to kind of numb ourselves or to not really pay attention to the drawdown, not pay attention to the times where the market is being very unfavorable. But what ends up happening is typically when the market is being favorable and things are going well and trading feels a bit effortless, we all experience this, those times somewhat take care of themselves. And not to say that we can't do things to take more advantage of those, but typically nothing really bad happens during those times. But on the flip side, when we are experiencing unfavorable market and when we are going through any periods of drawdown, these times do not take care of themselves. And in these times, very, very bad things can happen. And it's important to just be aware, to have a handle on what is going on, and to make sure that we're behaving very wisely. So the cycle that I'm talking about goes like this. The market ends up being very favorable. The conditions are favorable. And during this time, it's easy to just feel like we've cracked the code to trading. Feels like we got this thing figured out, like we made it. And it's also very easy during these times to kind of be trading poorly, but not have the P&L reflect that. We can be in positions where we do the wrong things. The market is going against us. We should be getting out of a trade, but we end up increasing the size, taking on a lot more risk than we should. But instead of getting blown out, it comes back. It goes into profit and ends up being a nice P&L trade. Or times where we're just getting really sloppy entries, but instead of getting chopped out, the trades are working and everything's kind of nice. And the market just seems friendly and effortless. And during these times, it's very easy to almost feel like we are doing something very special. But what's really happening in a lot of cases is we're just in a condition where the market is being very favorable. And when that happens, it's easy to get hyped up on euphoria and start letting ourselves trade a bit sloppy. And we're not really getting punished for it. But the market is cyclical, and the market goes through several different conditions, kind of constantly going in and out of different conditions. And inevitably, the market is going to turn into a condition that is not favorable for us. For the way that we trade, for the method that we're using, for our style, the action and the behavior of the market is just not favorable. And we've all experienced these times where it feels like we just can't do anything right. And it almost feels like the market is personally out to get us. Like if we try to do something, it immediately fails, or it's going to shake us out before it works out, or we're going to see an idea, but it's just not going to give us any type of an entry. And of course, these times can be extremely frustrating and very confusing. And it's very important to be aware we all go through this. Ray Dalio says, do not confuse the way things are for the way that we wish they were. And me, like everybody else, wishes that the market was always effortless, always favorable. But of course, we know we have to deal with these market conditions that are not favorable. Now, what normally happens is when the market is not favorable for us, what is natural and what most people do is hit the gas. They start over trading and they start using a lot more size. And at some level, this feels like the right thing to do, because if you're in a string of losses and if you're taking, a little bit of a beating, if you increase the size and if you're putting on more trades, you can get that back faster. And it can feel like that's the right thing to do in these moments. The issue is that you and I cannot impose our will on the market. In a lot of other areas of our life, we can't. If we're not happy with something, anytime that we want, we can start to turn that ship around. If you're starting to get off track with your health and you're skipping workouts and you're not eating clean and you're starting to gain weight and not feel good about your body, anytime that you want, you can right that ship. Start eating clean, start doing the right actions and start seeing some results from it. But when it comes to the market, there are a lot of forces at play, a lot of participants that are going on. And a large portion of our results we're not in control of in that way, to where we can just decide that, oh, we've been going through some losing days. Today, I'm going to turn it around and really crush it today. These decisions are a little bit outside of us. The market gives and the market takes away. And because of this, if we behave badly and we don't handle these times correctly, what ends up happening is we exaggerate what could potentially be just a normal little bit of a slow time in our trades or a little bit of drawdown, and we end up getting really crushed. And the market changes and the market goes through a different cycle, and the market conditions change to being favorable again eventually, where we start to see things more clearly. We're starting to get setups. Things are starting to make more sense. But because we've taken such a beating mentally, our mental capital has been so depleted during these times that when the market is starting to be favorable, we're not in a position to take advantage of it. And we've also taken such a beating with our actual capital that we're not in a position to use the size and to be aggressive as we need to take advantage of it either. And this is the dynamic that ends up happening, where when the market is during these favorable times where we should be hitting the gas, we're beat up. And so we're kind of limping along. And as the market is being really favorable, there's a lot of opportunities and we could be really pushing things. But instead, we're kind of slowly building back our confidence, slowly starting to build back some of our P&L. And then we get to this place where we're starting to feel confident again. We're starting to maybe use more size, starting to feel like we got a handle back on this right in time as the market changes conditions again. And then we get whacked and then we start the cycle all over again. And of course, the right side of this dynamic to get on is to be able to understand when these markets are turning unfavorably and to be able to throttle back and to survive and to kind of just get through those times so that when the market is favorable, we are pushing the gas and we're really taking advantage of it. I know that a lot of people, a lot of traders get stuck in this cycle, not really aware that it's happening. And it's just this vicious thing that just keeps repeating of the market is giving us so much, but we're just beat up and we can't take advantage of it. The market is not being favorable. We're stressing out, freaking out, doing all the wrong things, and we just can't get on the right side of this as a dynamic. So let's talk about that downward part of this cycle, because like I said, in a lot of cases, when things are going good, at some level they kind of take care of themselves. But when things are going bad and we're in a period of drawdown where the market is being unfavorable, this will not take care of itself, and very bad things can happen here. So I think it would be important just to understand that when we're going through these periods of drawdown or when the market is being unfavorable, this can kind of really happen for two reasons. The first one is just personally. Personally, you are doing something that gets your head out of the game and makes it to where you can't perform right. Trading is a performance endeavor, and no matter what the market's doing, you and I have to be in a position to do this. But 5 days a week, all year round, a lot of things happen. And to be in a position where, we're human, we're not robots, life happens. Sometimes you're going to fall in love and you're going to be hyped up on euphoria and dramatically distracted with romance. Sometimes you're going to go through a breakup and your heart's going to hurt and you can't focus on your trades. Maybe you get sick. Maybe somebody that you love or a family member gets sick. Any number of reasons of things that could happen. Maybe you slip into a little bit of hedonism yourself and start just living in a way that you can't be your optimal self. A lot of things can happen throughout the year that can get us off the screens. And this should be recognized that this happens, and we just want to be in tune with this and be aware of this. But then sometimes the market is just not being favorable. And what I mean by this, the market just goes through different conditions. Sometimes the market is being extremely volatile, but it's not really going anywhere. Sometimes the market is volatile, but it is exploring prices dramatically. Sometimes it's slow and just not moving. Sometimes it's being really slow, but it is grinding and it is going somewhere. And for your method, for the way that you approach the market, for the way that you trade, there are going to be times that are more clear to you, things that are more favorable for you. Yeah. And I think it's easy to come into trading and think that if we learn a method, that this just solves all of our problems. And the purpose of having a method and a way to approach the market, it is not so that every single time we sit down to the screens every single day, we can just crush the market. And that because now we know this method, we're always going to know what's happening. When you have a method, the purpose of that is so that you have a way of making sense and that you have a way of identifying an edge and being able to exploit it when that surfaces. And then every method is going to go through periods of time where there's not a lot setting up, where it's not being very favorable. And these are things that we don't have, quite a bit of control over, of course. Now, part of the trick here is to identify this as quickly as possible. There are times where things are going off the rails, and it's not that helpful when we've blown out and when we're starting to hit rock bottom and we're already crushed mentally. It's not that helpful to understand I'm going through a period of drawdown. Things aren't going well. And so we want to be able to as close to real time, start to understand when this is happening. And one of the really nice ways that we can do this is start to look for patterns here in the way that repeatable type patterns of when we are likely to go through drawdown, because there will be, in kind of a broader sense, just to give you an example here, typically through the months of June and July, these are historically and typically my worst months. And it's very actually normal for me to be going through drawdown and even end some of these months in the red. And on more of a small scale, FOMC week has typically always been a difficult week for me as well. The Monday and Tuesday leading into FOMC is typically a time where it's very easy for me to just have trades not working out, and very easy for me to maybe get caught out in a move that I didn't see coming. Maybe the example we were just looking about yesterday, this is FOMC week right now, and that huge move that happened was on the right side of that one. But moves like that maybe catch me out or that I'm on the wrong side of are more likely. And what we can do is we can start to identify repeatable type patterns, maybe times of the day, times of the week, times around news events, times of seasonal, where we tend to just not be performing well. And we are more likely to be in an unfavorable condition or not be performing. And if we can identify that, this is a huge step in being able to just handle it and make sure that we're aware of what's going on and move a certain way. When I started to draw those distinctions and start to connect those dots that, hey, the Monday and Tuesday leading into FOMC, I'm like getting crushed. And having that is very powerful, because now I always throttle things back, and I'm always very cautious the Monday and Tuesday leading into the FOMC. And these are changes that I've made because of making those as observations. The other really important thing we have to be able to do is have some process for reflecting and monitoring certain KPIs. And think about this in your trading. Is there any kind of a process that you go through for monitoring, let's say qualitatively, how your trading is going and how you're performing? And then on a KPI side of things, being able to track certain metrics to understand how your trading is going and if certain things are starting to dip. Again, I think it's very easy to come into trading and to think that we just get this method and all we have to do is just do the same thing, and it's going to be this money glitch that just takes us into freedom, right? And into unlimited wealth. And if we can understand and just always approach our trading as a business, this isn't how business works. Outside of trading, I'm involved in a couple other businesses, and one of those that you'll be familiar with is Tradacc. And for Tradacc, we run ads, and if we ran ads and nobody was monitoring that, and nobody was checking in on how those things were going, and nobody was throttling things back or pushing things forward, there are certain ads that do well. There are certain ads that do horribly and that aren't reaching any kind of an audience. And if nobody was monitoring or checking up on these things, we just run the business right into the ground. And every business is like this, of course. We have to be able to track these things. And this would be an important thing to just ask yourself and to realize, do I have any process in place to be monitoring these things? Because this is how you're going to be able to catch when things are going off the rails before the wheels fall off and things catch on fire. And you guys can let me know if this is an interesting topic to you. I think it's not maybe a particularly exciting topic for a lot of people, but it would be a video that I would love to make around what are these qualitative and some of these quantitative type metrics that we can look at, so that we can just be monitoring our trades and making adjustments as we need to be in real time. It's a requirement for us as traders. We have to be able to do this, yeah? So being able to catch this as it's happening quickly, there's some things that we can do to identify this and be prepared for this. And then just to be able to understand, is this happening because of something personal? Do I just need to get my act together here, get refocused and get back into this? Or am I doing everything right here, but the market is just being very unfavorable right now? And during this as well, when we're in these periods of drawdown, for whichever reason they're happening, it's a very important thing that we throttle back. This is extremely hard, and this is, I think, a very difficult thing to do because it's not intuitive. We don't want to do that. If something is not going right, we don't want to sit there and then scale back. We want to be able to, be more aggressive. That usually is like the natural thing to want to do. But it's the opposite. For the reasons we said earlier, we don't get to just decide when we want to crush the market. A lot of that is outside of our control, and it's up to the market gods. Yeah. And so we need to scale back. Scaling back, obviously, using smaller size is a great spot to start with that, just being less aggressive, throttling back the position size. But another nice way of falling back, or a nice way of throttling back, is being able to fall back on our highest quality trades. For all of us, of all the edges that we have in the trades that we take, there's going to be a spectrum of lower quality trades that are maybe a little bit more difficult for us, that are not our easiest and not our most intuitive. And then there are going to be trades that we just do very well, that we read the best, that provide us with the best risk to reward, that have the highest win rate, that we understand and that are the most easy for us to take. And there's a spectrum of these. And sometimes when the market's being very favorable, we can take these trades that are maybe a little harder for us or not as high quality, but there's a lot of good opportunity there in these favorable conditions. But one of the very nice things to do is when we are going through these periods of drawdown, to be able to switch our focus and to understand that this is my bread and butter. These are the trades that I take the best. And just to focus on those. If those aren't setting up, just sit on your hands. And if those are setting up, being able to take those and to take advantage. This is part of being prepared for the fact that drawdown is going to happen. And us as traders, we have to understand this about ourselves. What are our highest and lowest quality? What is that spectrum of that our trades are on? And then being able to know that these are the things that I do the best. This is what I'm going to put my focus on. While this period of drawdown is going on, while the market's being unfavorable, I just really want to focus in on these things. And I really want to be able to block out everything else and just be a little bit more inactive and just focus on my higher quality setups here. It's also a very nice time when we're going through a bit of a drawdown, the market's not being favorable, to lean into this and to use this time to take a proper break from the market. When as traders, we don't really have days off. We get the weekends, but there's not really like an off season. There's not really like a vacation slot. The market is just always here. We're always on it. And a couple episodes ago, we had a Speculators podcast guest, and I asked him, we were talking about, what do you do when you come in and you feel like nothing's working out? Like, you can just understand that this is not going right. You're not getting a good read on the market. How do you handle that? And one of the things he said was, I don't remember exactly what he said, but he said something to the effect of lean into that. Again, the market we don't really have set days off during the week for the market. So when we are going through these times where the market's being unfavorable, instead of trying to force our will onto the market and being frustrated and doing a lot of damage, lean into that. Use that as a time to take a proper little break from the market. If you've been trying to get out there and play a little more golf, take that as some time to go play some rounds of golf. If you've been wanting to take a day trip, if you've been wanting to take some time off and learn something different, use that time for this. It's just a much better way to use our time than spending more time on the screens, being glued to it, putting on tons more trades than we normally do, and doing a lot of damage when the action is not there. The market is not favorable. In this business, there is no mercy rule. Yeah. And there's nothing that says that, oh, this was bad, so the next one's going to be good. The market will just literally crush everything you have, and then some in some cases. And the reality is that virtually every year of our trading, we are going to go through sometimes multiple periods of these unfavorable times or these times of drawdown. But there are things that we can do to be prepared to handle it, to move in a certain way, to make sure that we are surviving, using it to our advantage in some cases, but ultimately being in a position so that when the market changes, and it does. I think especially early on, when you don't go through this cycle enough times, when the market is just being unfavorable, it's easy to just feel lost, to feel confused, to feel like you can't do this. And a lot of times it's just an unfavorable condition, and nothing lasts forever. The market will change conditions again. You will get that clarity again. Your edge will come back again. Supposing that it's really there, and we can be in a position to take much better advantage of that. Yeah. Listen, if you are not subscribed to the channel, make sure you subscribe and stick around. Make sure you hit the like button. And as always, at some level, when it comes to trading, we are all in this together. So as always, I'll wish you very happy trading out there. Be careful. Don't do anything crazy, and good luck.